Hello, this is Coach Mike from WinningStockCoach.com. Gonna start off my market overview video for the week ahead 2014. Well, if you can see the chart that's displayed here on the screen, you can obviously see that last week was a down week. Starting out here with the SPX weekly chart, that's the S&P 500. And if you remember, last week we talked about as we were heading to that potential 2102 target area that I felt that the risk of new long entries was greater than the reward that could be seen on new long entries. And therefore, we really weren't looking for new long entries last week. And, thank goodness. The other point that I had talked about very, very heavily over the past few weeks was what's referred to as a swing point on the weekly chart, and that was the prior swing high. That's just the prior weekly high close area, 2010 and 40 cents. So that was an important support level for us to be able to close above on the weekly, where even if we made the pullback, to simply bounce off of that area could be the second chance opportunity to get new trade entries and continue upwards to that 2102 target. Well, the problem is we closed below it. Not a lot below it, so I would still wait to see how we open up tomorrow because, especially Thursday, we had a lot larger falls than most anticipated. Then on Friday, we actually fell really hard at the end of the day. And not only did we fall hard at the end of the day, but it continued on very high volume for quite a while after the market closed. So, very, very important to understand where we might be at from here. And we're still going to use that 20-10-40 line to help us with understanding how we might trade in the upcoming week. And remember, I'm talking about trades, not long-term investments. Long-term investments, you still want to wait on those. You don't want to take the jump on them right now. We got another earnings season right around the corner. The second week of January, third week of January is the week that we'll see the financial stocks all reporting their earnings, and that's really a big kickoff for earnings season. And typically, you'll get an opportunity either at or before those earnings to get a pretty good opportunity and then be able to base it off of the fundamentals that you actually see, not that you're waiting on any longer. So with that 20-10-40 line in mind, and that's that horizontal line, now you see my crosshairs right here across it, we're simply going to say, because right now it's just shy of 2 p.m. on Sunday, the 14th of December, I don't see the futures, and those futures will dictate quite a bit of where we open up at. A couple things we need to understand is with that 20-10-40 line, if we move above that on Monday, as far as long entries are concerned, that's going to have to become our stop point, our support point. And if we continue below it, that 20-10-40 needs to serve as our resistance point or a stop point on shorts. At this point in time, I also want to point out that as big as this red candle is, it is not unlikely that you get some bit of a retracement of it, but still could possibly remain bearish. Now remember, this video and the videos I put out each week, they are not here to tell you whether I'm bearish or bullish. It is a market neutral sentiment that I have not just in this video, but in my own trading. The old saying goes, bulls make money, bears make money. Well, I add to that by saying, and if you remain neutral and are open to both sides, you can make twice as much money. So understanding that, hey, as big as the down move was, we could get a little bit of an up move and it still be bearish. I'm more so looking into those bearish opportunities. Those bearish opportunities will come if we continue downwards starting Monday. Or even if we do make an up move, if we don't retrace more than half of that big red candle that was for last week and begin to pull back again, we could see another set of bearish opportunities. Now, in the event that we continue pulling back, my target area that I'm going to be looking for is around 1880. You see on my chart down here, 1880.87. That's a simple point using Fibonacci retracements. It's been an accurate study for the charts, and the entire time I've been doing the market overviews, we've been within 0.5% of every market low and high, with the exception of one, and that would be this last high. I was actually a full percent, not 0.5% off from the high. I'm going to move over now to the DJI chart. That's the Dow Jones Industrial Average. You know, last week and the week before, I was talking about how we were at our high side target. We hit, obviously, you can see the big green lines is 100%. That was the target area we had for it. And you'll see from where we closed, we actually closed right at that weekly swing point. You know, the S&P 500 I was just discussing closed just a tad below it, well, the DJI closed right at it. And that's what made me inclined to use that swing point line, even though we're below it on the SPX, as a support or resistance line, depending on a direction on Monday. And we're going to do that same thing for the DJI. If we continue to fall and we fail this line with the value of 17,279.74 cents, we will look for 16,495.67 cents as our first down target area, our low target area. And if we do make a bit of an up move, we are going to hold that 17,279.74 cents as our support point for long entries. If we begin to make an up move, the candle starts out green, there's a risk in every trade you make, but it's how you mitigate that risk that will decide how you do overall as a trader. So let's talk about that line right there. Get it ingrained in your head, put it down on a piece of paper, staple it to your desk. I don't care. Have it there in front of you, because that is the important point we're going to be watching for to determine whether we can find a healthy support point to make an up move or begin to fall some more. Moving over now to the RUT, that's the Russell 2000, the small cap index. This one's been the most boring one to cover in my last 6 weeks of market overview videos because we just went sideways. Since hitting the target area, we went sideways 1, 2, 3, 4, 5, 6 weeks now. But this past week, we were actually able to close right at the lowest price made in the consolidation. So how's that important to you? Well, I'm not going to say that it's guaranteed it's going to keep falling from here. I'm going to say that if it falls any more below this low point that was made just a few weeks ago when we got down to the lows, if we continue to fall from here even more, I want you to look for the Russell 2000 as a first target area around $1,048.39. I believe that after this kind of a double top that we saw, that our most probable point is going to be roughly a double bottom, at which point, even if we were going to be bearish, we'll probably get a little bit of a bounce with a lower high before falling again, maybe even as low as this 949.67. But for the Russell 2000, if we continue to the downside early Monday, look at that for your opportunity to go short in small caps. And for a pretty significant down move. Yeah, down moves tend to happen a little quicker than the up moves in most circumstances, not always, but most of the time. So, you know, it wouldn't be a forever type opportunity if you're going to go short. But, you know, give yourself a little bit of time if you're doing the options, you know, give yourself February, March timeframe just to give you a little bit of management over the theta on your options as well. But Russell 2000 small caps, poised very well, I think, for further down move if it just goes down as a continuation from where it's already at now. Finally, to the NDX, this is the NASDAQ 100. Talked about it last week, how it was kind of an inside week a couple weeks ago and really didn't give a great visual for what it was doing, but gave you an easy way to trade it. Whether it continued up or down, it continued down. So your NASDAQ 100, I think we need to look for that swing point, like where the DJI and the SPX kind of closed up at. And for your NDX, I want you to watch right about $4,100 even. Easy number to remember. And, if you're short or playing puts in Apple or Facebook or some of those big name technology stocks, if you see it start to diminish in volume as it reaches that swing point, or maybe even go sideways a day or two, look at the potential at either covering completely or selling all your puts, or at least reducing on those trades at that point. But I do think if we lose that point, you're going to see 39, 28, 40 area. And that would be my first downside target at this point in time. This is Coach Mike from winningstockcoach.com, encouraging you to leave emotion out of the market. Don't fear the market, react to the market. Have a plan for every trade you make. God bless you in the upcoming trading week.